Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, welcome back. So you've got the market, which is going strong, and it's some give back, 37 odd points off the highs. I mean, the high was essentially the opening high, and after that the market dithered for a bit, sold off, and then picked up again. So I mean, there's plenty good happening. Advanced decline is in favor, and there are no as we've come to expect, any large stock selling off, a big accident or anything of that sort. So smooth sailing in that sense. Let's bring in our colleague Utkarsh, and he's reporting on what's happening in the small car segment. Remember, with demand for premium hatchbacks on the rise and waiting period on select models increasing every day, car makers are finding ways to up the ante for small cars. A CNBC TV18 special analysis shows that car makers are doling out huge discounts on small cars to make up for the flat growth which they saw between the months of April and June. Utkarsh is here with all of those details. Utkarsh, take it away.
Let me first run you through the level of discounting in this segment and then maybe speak about why this level of discounting is present in this segment. Let's start with the Alto 800. The ex-showroom Delhi price is 2,51,000. The discount available, which is cash discount plus exchange bonus, is around 55,000 on this car. Speaking about Eon, 3,33,000 is the ex-showroom price, and the discounts is 50,000. Same is the scenario with the WagonR and Celerio as well. The cost price is 4,15,000, 4,20,000. Level of discounting 65,000. In fact, a Grand Titan, the ex-showroom price is 4,74,000 for a petrol car. We have a discount of around 80,000 cars. The only car in this segment which does not have a lot of discount is the Renault Kwid. The price is 2,67,000 and there's a discounting of 20,000 only. But the numbers for Renault Kwid has gone down significantly in the past 1 year. Now, if you look at these discounts, in most of these cases, the discounts are 20% of the ex-showroom price. So why there is a need of such high level of discounting? Because the market is moving towards premium hatchbacks. The market is moving towards mid-size hatchbacks, which are of the range of 5 to 6 to 6 to 7 lakhs, and this segment is stagnant. If you look at the data from April to June in this financial year, the growth has been flat. If you look at Maruti, one of the largest car maker, in April-June 2017, they sold around 1,03,000 cars. In April-June 2018, they have sold 1,05,000 cars. In case of Hyundai, there has been a degrowth. They sold 14,940 cars in this segment last year. This time in April-June, they sold only 13,542 cars. The same is the story with Renault. Renault sold 20,385 Kwids. They have only one car in this segment, which has gone down to 15,927. So clearly, the segment is flat. There is not a lot of excitement in the market, and more importantly, the market is moving towards mid-sized and premium hatchbacks. Even 85% of the cars are being brought on a loan, and that is why people have the same kind of cash down payments, and people are ready to really increase the tenure of their loan and get a better car, and that is why you can see heavy level of discounting in the entry-level segment.
Okay, Utkarsh, thank you very much for that. Ashwini Gujral, Prakash Kaba are here with us on the show now. Ashwini, you had suggested buying the dip which took place around 10:30, 11. What's the trade on the Nifty now and the stocks that you've added to your trading list?
See, the market has moved sideways post the first 20 odd minutes, and that is a good way of consolidation where you are not losing too many gains, but the market is just letting off some steam. So that way, even the current dip should be bought. And my sense is that by end of the day, chances are HDFC Bank, etc., are still going to start pushing higher because corporate banks are already doing well. So that way, there could be more participation on banking. Even NBFCs have started to move up. So having said that, there's clear movement into corporate lenders. Capital First is a buy with a stop of 574, target of 600. Jubilant Food is a buy with a stop of 1470. Target of 1520, and UPL is a buy with a stop of 650, target of 675.
Fair enough. Ashwini, thanks for that. Prakash, what would your thoughts be right now?
Looks like Nifty is into sideways zone, but the trend is still intact up and has not been compromised. Our question is, where do you buy? Somewhere closer to 11,380, 85 zones. If you get a dip, those would be a buying opportunity. The recent low that we have seen is around 380. So anywhere closer to this buy. Looks like later part of the trading section, post-lunch, we could see a higher close from here. So there is a buying opportunity on Nifty. Even on Bank Nifty, exactly similar is the case. Bank Nifty is more stronger than Nifty. Targets on the upside in the vicinity of 28,050 or 28,070 zones. Looks like it can climb higher from here. Very strong support in the vicinity of 27,880. I like two stocks. Century Textile looks good. We can see an up move here. Target on the upside is in the vicinity of 940. Stop below 920 should be fine. And Hero Motors looks like a good up move has happened. Few days of consolidation and up move has started again. Target on the upside 3350. Stop below 3250.
Ashwini, any thoughts on Titan Industries? That's slipping as we speak.
See, Titan is basically sideways, 850 to 1,000. So I don't expect, big moves above 1,000 rupees. It needs to be bought around 850, sold off, above 950, 980. I think it's a sideways year for Titan.
Okay, Ashwini and Prakash, thanks very much, both of you, for joining us with those trades. I think we got the European opening now, so if you can, I think, the first trades should be coming in. And on your screen, let's look at what's going on. So CAC is up 0.16, FTSE is starting slightly higher, a little bit in the green, and the DAX is up about 0.1% or so as well. So higher starts on the big three European indices, but marginally so. They're not 0.5% or more higher. There's news at the bottom of the screen. Subros is going to consider raising funds via an equity issuance to an existing shareholder. We don't know the terms of the deal, but this is what we have at this point. Stocks moved up a little bit, 3.75% higher. Maybe we should dial up the management, ask them what they are planning to do, and the other details of this one. Okay, IOL Chemicals is the stock is on our radar. The stock is up 31% in the last 20 trading sessions. Nigel is here to tell us why exactly. Nigel, take it away.
Well, Prashant, this is not a stock that we normally talk about, but IOL, the stock has been on a non-stop upper circuits. Now, one reason could be that, in fact, ibuprofen prices have been moving higher. IOL, if you just, just take a look at it, they're basically into manufacturing of APIs as well as bulk drugs. So there's no real, it's more or less a commoditized business. But what I understand is there is a shortage of ibuprofen, both in the domestic markets as well as in the international markets. And IOL, they are a big player in ibuprofen itself, because close to around 20% of the global capacity is what they produce. The potential reasons why ibuprofen prices have gone up, one is internationally is BASF. They have shut down their plant, but that's only a partial shutdown, and that could restart in the next couple of months. The second factor is there is a bit of a shutdown even domestically. That's in India, and that's what's really pushing up prices. To give you a rough price increase, ibuprofen prices have gone up by around 15% domestically, and internationally they've gone up by around 25 to around 30% approximately. And remember, IOL is an integrated manufacturer of ibuprofen. That's their raw material and the intermediaries. That's what they manufacture, and that's what they're using captively. So they are protected in terms of the input cost spike as well. Remember, the last year was good. They turned back into the profit. Let's see how their quarter-one numbers do shape up. And why is ibuprofen important? Because pharma constitutes nearly around 56% of its total revenues, and ibuprofen constitutes nearly around 85% of that 56%. So we just thought we'll alert our viewers why, in fact, the stock has been going higher, constant circuits for the last few days.
Our technology is on our radar after posting a good set of Q1 numbers. The profit after tax is higher by 48%. The revenue is jumping 26%. Arvind Joshi, the whole-time Director of Finance at the company, joins us on the phone line from Delhi. Good afternoon, and thanks so much for joining in. About 60% of your business comes in from the two-wheeler segment, where you cater to the likes of Hero MotoCorp, TVS Motors, iShares. In this quarter, you've seen about a 23% jump there. Is that sustainable? And what was the new business that you generated from these clients?
Good afternoon. Thank you so much for your congratulatory message. Well, indeed, whatever numbers you are seeing, these are sustainable numbers. We have enough of order book at our disposal. We are continuously making our efforts to grow our product profile and ensure that, the numbers, what we are seeing currently, hold on for the full year.
Okay. Mr. Joshi, sorry, so could you tell us why profit after tax is up 48%, while operating profit is up, what? A little over 10%, right?
Yeah. So, you see, we had our IPO. The IPO proceeds were utilized for the purpose of repayment of debt, especially the long-term loans. We repaid almost about 250 crores of debt during this quarter. Besides that, we have seen positive operating leverage coming in from some of our new units which were established in the last couple of years. Add to it the fact that there was a high demand for two-wheelers, especially the motorcycles and the commercial vehicles, where we are the market leaders. We are number one in most of our products which we supply to this segment, and they are typically at a high margin. And all of them have helped us in terms of achieving what we have achieved on the PAT numbers.
Okay. Arvind, if you could help us with some numbers, what is the content which is supplied by the company per vehicle, say to a Hero MotoCorp? Has that number gone up? And even for your other marquee clients like TVS, Eicher, as well as Honda, if you could tell us.
Yeah, thank you so much. Our strategy has always been for product diversification, and product diversification is also on account of the fact that we continue to pursue our strategy of increasing content per vehicle. Over the years, we have been adding chip by chip across the various segments or the product technologies and product categories. So typically, across the various customers, you would see a Hero having a content per vehicle for almost about 2,500 to 3,000 rupees, depending upon the model. Similarly, in TVS, it goes from almost about 2,500 rupees to almost about 3,500, and so also for Royal Enfield. The fact that we continue to pursue our diversification program on the technology front also continues to help us in terms of increasing the content per vehicle. Now that we have made foray into the auto electronics, we would see some of the products on the auto electronic side, such as the parking sensors, playing out for our passenger vehicles and the commercial vehicle segment also.
But you're primarily two-wheelers, right?
Just about 58% to 59% is on the two-wheeler side. The passenger cars and the commercial vehicles fetch in almost about the 27 to 28% of the total revenue.
Okay. Now with parking sensors coming on board in terms of the technology that you guys supply, what will be the content per vehicle go up for Honda? What is it currently and how much could it increase by? And would it improve your margins?
So the parking sensors which we are bringing in, they are actually coming in for the passenger vehicle segment. It's coming through the joint venture. So while there won't be any direct inflow into the content for the main company, but certainly it would add up. From an overall perspective, as a group, we would be moving up from a 15,000 rupees or so product component being supplied to almost about 18,000 rupees.
Okay. And finally, you were planning to commission 3 plants in FY19. If you could just give us a status update on that.
Yes, we set up 3 new plants that was at Jaipur, Auragadam and Hosur. All of them have commenced the operation. They are currently at suboptimal level in terms of the margins. We had put in almost about 140 crores of investment in these 3 plants. The stabilization period is going on, and because of these new plants are currently operating a negative operating leverage, we have seen a dip in the EBITDA margin per se by about 1% and an EBT decrease by about 1.3%. But we are pretty confident that this quarter onwards, as we are already seeing for the month of July, we are pretty confident that these negative numbers will convert into positive as we projected for the full year.
So market staying pretty steady, no problems. We're bringing in one more management. Power Mech reported an order worth 1,390 odd crores, and we are now joined by the management of the company to talk a little bit about the order. So let me quickly get in Mr. S.K. Ramaiah, who is Director Business Development of the company. Mr. Ramaiah, thanks very much for your time. Good to have you here. Can you take us through the order? What will you do for? This is the state of Andhra Pradesh, from where the order has come.
Yeah. Good afternoon to you. Yeah, this is comes under the scheme of Andhra Pradesh Sarva Shiksha Abhiyan as part of the enhancement and modernization of the district schools. In the two packages which has come, the districts of Srikakulam, Vijayanagaram, and Vizag, about 872 crores. And package 2 is in the districts of Krishna and Guntur, about 512 crores. Both together about 1386 crores. And this is structured in such a way that the whole thing is modern. The whole work to be completed in a period of 24 months. And it is based on a hybrid annuity model. And where we will also able to get about 10% of the project contract cost as advance at a concessional interest rate of 6+%. And that will help us substantially in our working capital management. And the balance 60% will be paid to us, 40% will be paid to the contract execution. Balance 60% will be paid in the 10 equal installments starting from the 30th month. That will be completed in 5 years. Therefore, we have structured the contract accordingly, and we have built in the cost related to the initial execution and also the operating cost and also the post-execution cost till we hand over all the schools. The contract structuring and the financial package also is worked accordingly. And another important thing is that we have got a modest security deposit of 2.5% only, which is normally 10% in other contracts. Therefore, financially, it's an attractive proposition, and it is in the backyard of our headquarters in Hyderabad. And being a Hyderabad-based company, we are well versed with the geography of these projects. That's why we should be able to execute it properly in time.
Okay. You said your working capital position will improve on account of this deal. So your debtor days as of the prior quarter was about 73 days. So how much can it improve on the back of this deal, and what do you forecast by the end of FY19?
Yeah. It will be about another 5 days it will improve.
Okay. And will there be any upside to your FY19 guidance? You had guided for about a 35 to 40% revenue growth and margins above 13% for the full year. Will this deal provide you any upside to this guidance?
Yeah, I think we had a 36% growth plan in this current year compared to 17-18. And we can expect some more add-on onto that. 2,100 crores is the plan. And with this conversion, when we happens, maybe another 100 to 150 crores we can recruit in this.
Okay. Fair enough. Just a quick one. You said this is hybrid annuity, right? So the government puts up 10% first.
Yeah.
Yeah.
So the 40% they put up during the contract period. And that 10% they give the advances at a very low concessional interest rate.
Yeah. Sure.
Yeah, that will help us.
So
in the initial...
it's a EPC. It's like a hybrid. I mean, it's like EPC, but with a upfront payment of 10%, right? I mean, like any other.
Yeah, it's an EPC.
Okay, no. So this is this takes the total order book to what? And in what segment does this come in for you?
It comes under the you can say the EPC model for the infrastructure, school infrastructure, and the order book will go up to plus 6,000 crores.
6,000 crores overall for the company.
6,800 crores.
Okay, all right.
Broader trend for the last 3 hours has been sideways consolidation. At least in the last 30 minutes or so, the markets have come off a tad bit from the highs. Kotak Mahindra Bank is now down 2.25%, giving up all the gains that it saw on Friday. Titan is weak after the jewelry segment disappointed in its performance, and weakness seen in Cipla as well as Infosys as we speak. But it's time now to get a complete roundup of what's happening in the commodity and the currency universe. Manisha Gupta joins in as always. Manisha, the Kharif sowing numbers are in?
Well, the latest ones are in, and there is a bit of strength back in them, because remember last week we were struggling with nearly 7% decline year-on-year in sense of sowing numbers. That one is down just about 1.7% at this time. But also remember that the last week is when we saw the advent of very strong rainfall or monsoon in the central belt of Agri-India, and that clearly has been very supportive. So if you look at the numbers right now, it's 1.7% still below as compared to last year. That really is the problem areas on your screen: paddy, cotton, monsoon pulses and core cereals are still down anywhere between 3 to 4% there. The pickup clearly has been seen in case of oil seeds. From a minus 5%, we are plus 6% onto that one. It is oil seeds where the government has taken a lot of measures in sense of import duties. MSP has been on the higher side, and that clearly seems to have been favorable for that commodity. The concern also, of course, has been in case of cotton, where we have seen nearly 4% of a decline come in. The monsoons, of course, is something that would be on radar. As of now, it still is 8% below normal, but there are positive comments coming from IMD over the weekend, where they said that the August rainfall is expected at 96% of LPA, and that, of course, has been hiked from 95%. So that, of course, is a bit of a solace there. But Aurobindo Prasad Gayan now joins us to talk more about that. Aurobindo, hi. First of all, on the agro commodities space, with the kind of numbers, the monsoon that we are looking at, what is your sense? Where is there a trading strategy here?
Well, I think the last 5 days report that has come and shows slightly decline. I think as we proceed through next 2 weeks of August, then I'm sure the numbers are going to completely change. And as you said, the MSP has actually helped more sowing. So altogether, if I look at it, the broader perspective, the sowing of all the commodities are going to be higher than the last year. So I'm sure the numbers are going to be better going forward. As far as a few commodity, as we mentioned now, cotton is being down by 4%. I think as a matter of fact, another 1 week, I think a steady rainfall like this, what we have observed last week, if it is maintained and no threat of pink ball worm kind of issues in the Gujarat, the yield should be better. I think we should see positive number coming in. So I think the sowing number itself in India so far, whatever is down by 4%, it's double this figure of US sowing number. So I think it is all looking positive. We are hopeful that the rain god is going to give us better blessings to us.
All right. Also, let's talk about the crude oil prices, because we've seen the first set of Iran sanctions, that those will be detailed or implemented tonight. What is your sense? Do you see the crude oil prices taking impact? Though, of course, the crude oil sanctions only come in process from 4th of November. But now this is a reality. We are looking at sanctions being reposted yet again. How would you look at crude in that light?
Well, last 2 weeks we have seen crude oil being trading $2-3 range kind of altogether. But then I think we are expecting some sort of volatility to come in. No doubt, we are seeing that the NYMEX crude oil not able to break above $71 per se very consistently. So maybe a pullback is something that could be expected, maybe back again towards $70+ dollars. But then volatility is something that we are looking at for this week, and selling on rise would be still a strategy for crude oil this week. But then not exactly at the current price. As I said, we need to expect another $1.5 to $2, which translates to almost 100 rupees from Indian market here. And then only we can plan to go short. But selling on rise would be the view for crude.